With 6 weeks left on the job, European Central Bank President Mario Draghi wants to put the Eurozone economy on a path to recovery.
Incoming information since the last Governing Council meeting indicates a more protracted weakness of the euro area economy, the persistence of prominent downside risks, and muted inflationary pressures.
To bring down the cost of borrowing, the central bank has slashed its key interest rate to a record low of minus 0.5%. Starting in November, it'll buy up $22 billion worth of bonds a month with the aim of pumping cheap cash into financial markets. And the Monetary Authority has eased long-term loan requirements for banks to prevent lenders from running into liquidity problems. Draghi says the measures will remain for as long as necessary. The Eurozone economy grew at a rate of 0.2% in the second quarter. Export-reliant Germany was the biggest drag on the 17 economies sharing the euro. The bloc's biggest market shrank 0.1% over tensions between two of its biggest trading partners, China and the US. Berlin says it's ready to ramp up spending to prevent a prolonged slowdown.
With the solid financial foundations we have today, we are in a position to counter an economic crisis with many billions of euros should one actually break out in Germany and Europe.
Draghi will preside over his last policy meeting as the central bank's president on October the 24th. That means he'll get another chance to approve more stimulus if the bloc needs it. Paolo Montecillo, TRT World.
Well, for more, let's bring in Peter Vanden Houte, Eurozone Chief Economist at ING. He joins us now from Brussels. Welcome to Money Talks, Peter. So the ECB is cutting interest rates further below zero. It's also reviving its bond buying program. Is this what the Eurozone needs right now?
Yeah, well, hard to say whether this will be sufficient to revive the Eurozone economy. On the one hand, it's true that the ECB had created so big expectations that it had to do something, because if it wouldn't have acted now, probably we would have seen a very adverse market reaction. But at the same time, I think the ECB also acknowledges that the marginal impact of its monetary policy is diminishing. And that's basically the reason why Draghi clearly said that now fiscal policy should take over, that monetary policy cannot be the only game in town. So I think, yeah, it was necessary that the ECB did something, but it will probably not be sufficient to revive the Eurozone economy.
Yes, let's discuss the impact of what the ECB can do, because under its previous QE program, the ECB bought almost $3 trillion worth of bonds between 2015 and just last year. Yet the Eurozone is now suffering from the same sort of problems, low growth, low inflation. Why would it work this time round?
Well, yeah, doing nothing probably is not an option either. And one of the things that the ECB is aiming at is that the low interest rates, or even the negative interest rates that we're seeing now in the bond market, actually give space to the governments to invest, to spend more, because at the negative interest rates, of course, it becomes more interesting for public authorities to put in place infrastructure works and so on. So I don't believe either that it makes such a big difference for the private sector whether interest rates are now 10 basis points higher or lower. That will not change the decision making at the corporate level as regards investments. But it has to be said that for let's say for the public sector, lower interest rates or even more negative interest rates create fiscal space to do something. And I think in combination with a more expansionary budgetary policy, it might work at the end of the day. But in alone, I don't think that it will have such a big impact.
Okay, we also know that some of the Eurozone's core economies, including the Netherlands and Germany, really pushed back against reviving quantitative easing. Now, can you tell us what is the argument against Mario Draghi's plan?
Well, I think the main argument for, let's say, for the northern countries, think of the Netherlands, Germany, Finland, and so forth, is that they believe that in cutting rates further on the one hand, but especially also buying government bonds, that it is something that, let's say, prevents governments from doing the right thing, because they say, okay, as long as money is cheap or the interest rates are very low, some of the countries with a very high indebtedness, they will not take measures to structural reforms and so forth, because they are at ease with the current ECB policy. So they're financed anyway by the European Central Bank. And so the northern countries believe that that's one of the reasons that we don't see more structural reform in the south, because as a matter of fact, those countries don't feel the heat, they don't feel the necessity to act, to take more difficult decisions themselves.
Now, this is Mario Draghi's swan song before he hands over the reins to Christine Lagarde in November. Do you think that when she becomes ECB governor, will she change tack? Will she change that approach?
I don't think so, because actually in her parliamentary hearing in the European Parliament, she already more or less said that she will continue Mario Draghi's monetary policy. But I think one big difference, we could see one big difference because, let's say, Christine Lagarde is a bit more of a politician. She was minister, she was head of the IMF, so she was in contact with many heads of state and prime ministers. And that might be a necessary thing now, because, as I said, monetary policy in the margin doesn't have that much impact anymore. We're really at the limits of what monetary policy can do. And so we should see this in combination with a more active budgetary policy from some of the countries. And so perhaps someone like Christine Lagarde, who is used talking to the heads of state, to the prime ministers, she can convince especially Germany, but also some of the other countries with a budget surplus, to spend a bit more to try to get the whole of the Eurozone going again.
Okay, let's see what happens when these measures take effect. Peter Vanden Houte in Brussels, thank you again for your time.